All right, good morning, everyone. Louis Borsellino, MANOVERMARKET, and today is Tuesday. Let me get the date correct. It is the 15th. We're halfway through the month. Everybody's anxiously awaiting the Fed decision on the 17th for whether they're going to raise rates or not. I'll tell you what, my brain hurts trying to figure out if this is the right thing to do, the wrong thing to do. I kind of look at it like, let's get it out of the way and let's go on with our business. It's not going to make that much of a difference psychologically. But when you take a look at the federal funds rate, and it's been near zero now for like 7 years, what will that, 0.25% increase do psychologically to the market? I think it's been well forecasted. I don't think it's going to be a surprise to anybody. I think they are going to wait and hold until October and keep us guessing. But I think that this is an interesting dynamic because of the implications it has worldwide and it has in all the markets. The other things we have to consider is that now the Fed has also started their little secret ploy that they have going on now, that they are now buying debt from non-banking institutions, which means there's about 160 mortgage companies, hedge funds, and non-banking institutions, which they're buying about $300 billion a day in debt and so on. So right now, and they started paying about 50 basis points on this money, and then when the market started to go in a frenzy, they were actually borrowing money close to zero, and at some point when they thought the world was melting, they were actually charging people to hold the money. So I don't know. Look, fiat money is based on all of us, all of our goodwill, all of our assets, all of our ability to pay it back. And 7 years later, after the Lehman Brothers scandal and the debacle, we have 0% interest rates, and we only have certain segments of our society doing well. So I don't know what we're going to do. But let me read my little disclaimer so that I don't get sued if I say something that causes you to make a wrong decision in the market. Of course, it couldn't be you. It's always going to be me. Anyway, trading futures, options on futures, and the retail off-exchange foreign currency transactions involves substantial risk of loss, is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of the future results, and the following information is an expression of our opinion and is provided for educational purposes only. So that being said, the market is acting exactly like we thought it would act. If you've been around trading for a while, I'm going to start sharing my screen now. Okay. All right. So, everybody's anticipating what's going on Thursday. So market really has sort of low volatility overnight. We're actually making new highs right now. We went up here now and just made a new high of 1952, and it's pulled back a little, which will cover these things. What I noticed last night, I went back and I looked at the video that sometimes, I'm going to try to expand these letters so you guys can get a better picture here. Let me see if I can move this down now. Okay. So if you look at this row of Bs, that was yesterday's opening, and you often hear us tell you about single prints. So if you're new to the profile, these letters here on the right were uncovered until last night and early this morning. So if you see this letter right here, B, and you look at the corresponding price going across, which is going to be 52.75, which was yesterday's high, that's called a single print because there's no corresponding letter to the right of it. And we have now gone back and we're almost completely covered the single prints. Okay, so this is the overnight action in the based on profile. Okay, and we have a low down here, okay, of 1935, and what is it, a quarter? It looks like 1935 quarter or half. No, I'm sorry, quarter. So 1935 quarter. Also, this looks unfinished to me. Unfinished meaning that this tail here, okay, created a buying tail, and it doesn't have any corresponding letters. This would exactly be a single print, okay, on the overnight action. So on a long-term basis, if you see these, I'm going to shrink this chart again because I want to drag it over so you can see some. I'm getting used to this now. I'm going to shrink it. Oops. All right. I'm going to shrink the chart because I want to bring some actions in here. All right. So this green letter, okay, this green per line, this red here, and then this other green dotted lines, okay, these are, and if I can bring this over more, okay, these are what we call right here at 1934 and at 1932 half naked modes or naked VPOCs, volume port of control. We call it naked or virgin because we have not gone back and tested these areas which were areas where there was the most volume printed. Okay, so just a little lesson on profile. Okay, now we are having an issue with our profile and our data. Okay, we're trying to resolve it, but so we always kind of look at our profile and then we look at, you know, we got our value area high and low. Okay, and we have three other data feeds that have printed the VPOC at 1940 half. So we have used that as our VPOC is over here. Because remember, when we put this in the shaded areas and all those nice things, it's the chart formation, this gray shaded area, okay, is an easy aesthetic way to look at the profile and have it so you know where the value area high, low, and different points that we look at, right? So we are going to use it, even though it's painted here at 1943 half, it is that 1940 half. So, and the difference in volume between here down to 1940 half is about 700 contracts, which is negligible when you talk about how much volume we traded for the day. So there's my little spiel and then a little warning here. We're going to try to get this worked out with the, make sure that we're giving this to you accurately. This happens every once in a while because you use different data vendors and so on. So, and the way it comes, their feeds and connectivity to the exchange. All right. So we have the 5-minute pivot right here. Okay. Is in a buy right here and it's down at 1939.75. And the 5-minute pivot, and we've got all the, I'm going to bring these in for you. Okay. So there's the NASDAQ. It's in a buy and its pivot now has moved up to 42.94. Here comes the YM. All right. There's that, and its pivot is at 16.263. And let me bring the Russell in. Okay. So it's 1143.60. So I got all the sisters, and we call them the sisters. All the indexes are in a buy. Okay. And let me get it back out of here. And the market looks like it's getting ready to go and test the upper part of the range, right? So when I shrink that down, so now I look at the different time frames also, right? So here is our market profile based on a chart. And we got today, the bull bear zone is 1947. Okay, we are trading above the bull bear zone. Also, our 15-minute pivot is right here at 1950 half. So we're going to have to get through this 50 half area to start going, keep the momentum on the upside moving. Also, all right, when we look at yesterday, so we had 1947, and the top of the middle yesterday was 1946, which we now have navigated through. And overnight we went back through it. So remember, we're talking about the value area high after we were looking at the profile. So we put it in here so that you can see it at 1944. 1940 half is the point of control, okay? And then 1939 is the bottom of value. And then this is our CSI, okay, and MACD showing momentum. As you can see, this never goes from red to green. It goes red, gray, green, gray, green, gray, green, gray, red, went gray. We have now turned green. We've got MACD, we've got our CCI and moving averages crossing the center line. So right now, I'm in a buy mode. Market's up about 550, and unless we can go back and we may have retracements, and I'd be looking to buy retracements as long as we don't take out the 5-minute pivot. Okay, so looking for the market to move back down through here, test the top of value, test the VPOC. These are the things that we look for. But my frame of reference here is to be long. Okay, now there's one thing that we have to think about here, right? And that is that the market possibly has a lot of shorts sitting in the market, and we're getting some flattening before Thursday. But if we're in a two-sided trade, meaning that there's some naked VPOCs on the bottom and different areas that have not been covered, and we're still trading in a trading range. When I tell you about the trading range, then I bring in my big old spaghetti chart right here that's going on a 2-year chart. Okay, so let me try to blow this up and try to, because I was watching last night and I just can see that some of the stuff is really hard to see. Okay, all right, so this is the low of October. So we're coming up on a year, okay, a year of the low from, if I put my cursor right here, we had a low at 1813 on December 15 of 14, okay? And then, as you can see, the market had 1, 2, 3, 4 up days, a down day, 5, 6, and another up day, a little down day, another up day, and then we made these, we just bounced off those lows, went up to these highs, came back and tested this area right here, okay, which is 1970. But let's give you an exact, okay. So this low right there is 1961 half, okay. So I'm looking at that 1961 half. So what I did is and then the market kind of all year has basically been trading right above here, and then we went and made all-time highs. Okay, all right, now let me move this chart over some more. Okay, so what did I do? I took the all-time high down to that significant low for me, and then I drew some Fibonacci retracement numbers. Okay, and that Fibonacci halfway point is coming in right here at 1974.57. Okay, 74.57. Okay, and so when we get back to this side of the chart, you can see that we are trading between the all-time high, and so this is, let me give that one little click. All right, one more. All right, so I'll bring it back. So we are trading, what I like to say is the 78.6%, which is a big number for Mr. Fibonacci, because he's Italian, and Italians, we kind of get this stuff right. All right, when it comes to math, that's why a lot of us were bookies. So anyway, getting back to the story, we are now trapped in between this range of 1974 half and let's call it 1881 half. All right, so and this is good. This is good, right? You heard the term greed is good, but this is good. All right, and you can see that we're starting to make higher lows. Okay, we haven't made higher highs yet, but we are making higher lows and getting consolidation. And I'm thinking that the market is going to rebound by the end of the year once we get this Fed stuff out of the way, right? And then the markets will close higher on the year, So I'm just telling you that we're going to get I still think we got a two-sided trade. I think the market's not done trending, or it's not in a trend straight up yet, but it's starting to consolidate. And when I look at, so then when I take the day only profile right here, let me just make it bigger for everybody, because I know I saw it last night and thought, it's a little difficult to see. So so this is a 20-day profile. All right. And if I make this let me see if I can click on this. There we go. All right. All right. Now I'm going to spread this out so you can see it more. All right. So we're starting to get consolidation. Here's the same thing. Bar charts, volume consolidation. We're trading above the 20-day mode, which is 1932. And as remember, we have those naked VPOCs down there. That's the ones that I told you about, 1934 to 1932. So I'm thinking that the market needs a couple more retracements in that area. And I think we're going to get it based on the fact that we're going to have a Fed announcement on Thursday. So these are the kind of things that you have to start looking at and developing your process, right? Because there is no such thing as a holy grail when it comes to trading. It's a process, and it's a process you have to do every day, and you have to become very disciplined about it. And if you're not going to be disciplined about it, if you can do this part-time, just go to a casino. Just don't bother. Go to a casino, right? All right. So, Anthony, we got any questions?
Nothing yet.
No questions yet, so you could type in your questions. The other markets right now, to me, gold is, kind of flat right now. It's definitely in a downtrend. Okay. It's actually trading above value. I have not put today's values in here, but as you know, yesterday we kind of, this has been critical, right? So I had the bull bear zone and gold at 11,810, okay, and it hasn't got back and above that yet, right? So I'm not going to use that as a resistance point right now, is 11,810, right? So that's 1,108.10. We're down 350 from the close. All right. Bonds are a non-factor, non-event. Don't even look at bonds until Thursday. All right. And then you're going to see a big whipsaw in bonds based on what the Fed does. Okay. Oil, same thing. It's trading above value. I have not put the new bull bear zone in yet, but yesterday we had 44.64. As you can see, we have not violated that 44.64. I think, you got Goldman Sachs, you got a bunch of other market experts are predicting that they think oil is going into the mid-20s. Okay. All right. So all of this is, how is this affecting the stock market? Well, it's affecting the stock market and the Fed's decision, because if the stock market goes down, we have no other place for yield. I don't know. I'm really kind of caught. I'm caught in between with this whole debate about this QE. Any other questions yet, Anthony? Nothing.
Nope, nothing. Covered
Okay.
everything.
All right.